Until you stop doing that, you're going to continue the same journey unless you get lucky. And I'm not here to win because I'm lucky. I'm here to win because I guaranteed the win, right? And so I'm famous for saying this internally. It's like you can engineer the outcome you want. You just got to lock in and commit to it, right?
Yep.
And so that's the move.
Welcome, my fellow Flow Masters, to another episode of the Cash Flow Authority podcast. I'm your host, Chris Jansen, founder of the Flow Authority, and this show is for high-performing professionals who did everything right. You've got the degree, you've got the career, the income, but there just feels like there's another level waiting for you out there. And so here we explore how real estate can become that next challenge worth building so that you can take ownership of your future and create a life by design. And so today we're joined by a special guest, Mr. Larry Mastropieri, and Larry is the CEO and founder of Mastropieri Group and was recognized by Statista and Newsweek as one of Florida's top real estate professionals for 2025. He's led more than 2,000 closed transactions, manages an active real estate portfolio on top of that, and is also co-host of a podcast as well, the Real Deal Investing Podcast, and creator of Discover Self Florida. So he is a busy guy, but we're pleased to have him here. Larry, welcome to the show, my friend.
Thanks for having me. Great to spend some time with you, man.
Yeah, you bet. So I was kind of looking, snooping around and noticed you have some engineering background. Is that correct?
Yeah. I was a mechanical engineer by schooling. Call me a mechanical chemical engineer by trade for a very long time with General Electric. And during that time, I was also buying real estate. So I transitioned from the engineering world into a full-time career in real estate as a broker. But primarily that move was designed to help me focus on investing in real estate more so. But when I made that move, I started doing a fair amount of residential brokerage. And before I knew it, we're selling close to 200 homes a year at this point, and we're cooking. So, yeah.
Awesome. That's cool. Yeah, I mean, similar background. I recently quit my civil engineering job to pursue real estate full time. Instead of brokerage, I'm doing coaching and then also investing as well. So that's really awesome, man. I'm glad to see some other inspiring stories. Yeah.
Tell me, what do you think about the education and how it helps you in business? What's your feel on that?
The education is one thing. I mean, I've always had the analytical mind, so I think the education helped just kind of foster that even more, which definitely helps on the investing side when analyzing deals. Sure. The business side, I feel like, is more something I got on the job. That's sort of more on the job training that, I was getting into project management and things like that. And I really feel like if you can be a solid project manager and learn how to do that, manage a team and all the resources that are involved with a project, that really transfers over to the real estate world.
Yeah, I'd like to tell people that the engineering degree in itself is a degree in or a training on how to think logically and critically.
Yes.
And when you move that over into business, it can help a lot because a lot of people make, in my opinion, emotional decisions, even though they think they're making logical decisions. The mind can trick you into thinking you're making logical decisions when you're really not. And an engineering degree, 4+ years, and then on the job experience doing the same thing really helps you lock in on I'm making logical decisions and teasing out the emotional, incorrect assumptions. That's the biggest thing. Everybody makes assumptions, even in investing, right? This is the thing we tease out in the investing piece all the time. It's like, what is actually true?
Yeah.
And when you really think about that, like I challenge everybody, really think about that, because when you really think about that, you find that more things are not true than you thought were, right?
Yeah, no, absolutely.
It's crazy.
Absolutely. I mean, even just, a simple rental property is easy, fairly simple, straightforward analysis, but to your point, there's still a lot of assumptions that go in there. And it's like, hey, man, if you're assuming the same percent for maintenance and vacancies and all these other things, And even property management. Oh, I'm going to self-manage it. I'm going to put nothing for property management. That's one side, and then the other is, okay, I'm going to pay this guy 10%. Well, what other fees are they charging? Do they charge when they renew a lease? Do they charge when they get a new tenant in? Some people charge a full month's rent, and you're not accounting for that in your spreadsheet. So there's a lot of, you got to get into the weeds instead of just, 10% here, 5% there. So yeah, I love that.
And that in a deal analysis, a simple deal is one thing. A 40-unit apartment building like the one we just purchased is a whole different thing, right?
Yeah.
Also, you tend to make assumptions on things you don't entirely have all the facts on. So when you're like a smaller multifamily investor like we are, or just doing single family investments, there's no way you have all the answers. You don't have the facts on everything. And so you just have to understand like where that goes and how you can kind of drill down further to get at least a little bit more clarity or eliminate some more of the risk. And that's what I think engineers, to your point, the analytical brain does naturally when you're built that way. But when you get trained on how to do it and you work in the field, it becomes even a bigger thing because everybody uses this example. When you're designing bridges, you can't really make mistakes, right?
Yeah.
So it's like that, and that's kind of the world you and I both come from. So,
well, even I learned this in believe it or not, in my geotechnical engineering class, which is soil mechanics and dealing with the soil. It has nothing to do. But they talked about managing risk, and they talked about designing an airplane, which again has nothing to do with soil mechanics, but they're just trying to drive the point home of risk and saying that, look, even an airplane, we have to design for a chance of death. Like literally, what's the chance somebody's going to die every time they get on this airplane? And so there's always a chance, there's always a chance. It's not zero. If it was zero, like, it would be too expensive to build or impossible to build something that was infinitely, no risk. And so there's these ups and downs. And it's the same with real estate. With any investment, there's risk.
Same with anything, right?
Yeah.
A lot of non-engineers probably never heard this term, safety factor, right?
Yeah.
And so in engineering school, I was on the Formula One or Formula SAE team, right, where you build the race car. That's like a small version of a Formula One car, right? And you take it to competition, and you compete against all the best schools in the country, et cetera, et cetera. And we'd always talk about this because, like, some of the trial runs or the actual runs for the car are like, how long can it last, right? Will the car break down and push it to its limit? And so we're talking safety factor. And so when you talk safety factor in business, it's the same thing. It's like, what is the what are we designing this to? Are we designing this? And we always joke, we design a safety factor of 2, just because you just never know. If your safety factor is 1, that means you think you've designed it to exactly the standards, and anything slightly above that fails, right? Safety factor 2, it's like double the standard, right? And so always designed to 2 because in most cases things are going wrong, right? And that's how you kind of need to look at investing, because as Warren Buffett says, or any of these big investors say, like, the whole goal here is to protect against the downside and not lose money. Let's start with that. Don't lose money. So you have to invest if you're in the game. So you can't just not invest and not lose money. You have to invest. So you're going to invest. And then the next thing is, how do you protect against the downside or get asymmetric risk return, right?
Yeah. Well, and then the other side of that, though, is if you're too conservative, which I feel like this is the
Never
trap.
do a deal.
Yeah, this is the trap most of us get in on the engineering side, right? Is we're overly cautious, overly conservative. At least civil engineers. I don't know. I can't speak for mechanical.
Same.
Yeah.
Same. There's a personality type there, right? It's for sure a thing. But I know some engineers that are a little on the riskier side. But on the other hand, most engineers are probably going to, live their life or design their investments to low probability of loss, right? Yeah. And so, but again, to your point, especially, we talk about this all the time. Like, you can model the perfect model, right? That's going to make you money, but you'll never be able to buy the deal because it's half of what the asking price is, right?
Yeah.
You know what I mean? So,
exactly.
So it's like, at some point you need to lean in, and therein lies the art of the business, right? And so at some point there's a separation from science and engineering, and now it becomes an art, which is super interesting. And that's actually part of what I used to do at General Electric. I was a consultant for big power plants, heavy industry, phosphate mines, sugar mills, et cetera. And so there's this level of like, these systems are so complex that even if you are designing and modeling something where you're solving a problem, you're like, okay, this water system has a problem. It's shutting down the equipment because of X, Y, and Z. The chemistry in there needs to be changed, whatever. And so you think you're going to inject this chemistry into this system and it's going to solve the problem. But again, there's this level of art to it. There's a level of understanding the investment from a tangible perspective, having this nuanced like feel for things that maybe the system design is from a spreadsheet looks great, but or you have the feel it's just, this isn't going to be enough, or it's just not going to work, or this is a terrible idea from an application perspective. And so that's where I think I got I honed my ability to kind of make those judgment calls, if that makes any sense.
Yeah, it does. And, I feel like with my engineering experience, that's more also, on the job type of thing. It's not something 100%. You necessarily learned in school, right? I mean, we had to design interiors of buildings. These are very minor buildings. They weren't like anything fancy or anything, but there's a lot of, and even underground vaults that are like 30 feet below ground, and people got to climb the ladder down to get into there, and they're managing, operating these valves and things. And it's like on paper, right? It looks perfect. It's fine. Oh, we got 2 feet over here and we got all this space. You go out there in the field and you're like, man, how is somebody going to get down there and actually...
What moron designed this?
Yeah.
Right. Right. And that's so funny because like when you're like us, you and I, we're engineers that are in the field, and we're like in between the guys who sit in the office all day and never actually see a valve or come out to do the tour once in a while, and then we're the guys that give them the tour, right? And show them where all the things they screwed up were and they should do better next time, right? It's like building a car and you have to to change the oil filter, you have to pull the whole engine out. Like that doesn't make any sense, right? It's like that kind of engineering nonsense. And so in the field, we make fun of engineers, right? When we were like the places I worked at, like it was like these engineers are dumb, right? It's like because again they don't have the field experience. Not all of them, some of them, right? And so, but to your point, this again is where you need to connect the two, which is like you need to understand construction when you're buying investment property, right?
Yeah.
You need to be in the weeds. You maybe need to have fixed some of this stuff yourself, or at least gone through it and got in the weeds with your contractor to understand it, so you understand the next one.
Yeah.
Right?
See one, do one, teach one is
there you go.
One concept I like a lot. So, but for me at least, I don't touch I don't touch the flips. I don't get in there and get my hands dirty, really. Because that's just not me. I really rely on my team for that. Do you have a lot of team members, partners that you rely on? How important is that for your business model?
100%. I mean, there was a time when I started that I had a pickup truck, right? And I was using that. And like before you know it, you're bringing material to the site. You're doing all these things. So early days, I did stuff and I learned, and I did it way worse than my team does it today. Like they're so much better than I ever would be. And that's something I think that everyone should take away from this too. The guy who does the specific thing every day is going to do a way better job than you, who's trying to save money. Plus he's going to probably do it faster. He or she's going to do it faster. So early on that was the case. And like now today, I mean, I'm way too busy to be, messing around with stuff like that today, but I don't have a pickup truck. I have a sedan, right? Yeah. And I have that for a reason. You cannot ask me to help you go get stuff. Not that my team would anymore. We're kind of beyond that. But there was a moment where there was like that transition where it's like, you could easily get sucked back into that thing. Now we've scaled to a point where, we have buildings that are 3 hours away that, I've been to once maybe twice during inspection, purchase, and then my team handles everything from there on out on the investment side, if that's what we're talking about. Yep.
Yeah.
So.
And are you getting, you mentioned a 40 unit, are you solely in multifamily now, or what are you focusing on?
We have some single family stuff. Not really though. Efficiencies of scale is where we're headed now, given the time constraint and the change in income. As you grow, things change, right? And so the bigger stuff we can do the better. So more recently, we leveled up to purchase a 40 unit, which is the biggest deal we've ever done. That we closed 4 months ago in December. We're really excited about that one.
Awesome.
Yeah, that's also the furthest deal away we've ever purchased. I know there's people that buy stuff all over the country. They feel really comfortable about that. I've historically, me and my business partner, we've historically bought stuff in South Florida and like really knew what we were doing just from the neighborhoods. Like I know everything down here. I'm a realtor that sells 200 homes a year in this area. So we were able to do that successfully out of our normal locale. And that's like a big step for us because I think it just unlocked our brains to go ahead and do stuff in the rest of Florida, which is exciting. So now we're seeing more deals. In fact, we're making an offer right now as we speak on another project. So,
okay. And I guess, so a 40 unit deal, a lot of people raise money to do deals like that. Do you guys do that? Do you capital raise or everything's in house?
This is all me and a buddy I grew up with. He just so happens to be a private equity guy in New York City. I'm down here in South Florida, obviously. We grew up together in New Jersey, and we've been doing this for about 15 years now. And we've just been consistent. Every time we have the ability or the opportunity shows up, we strike. And now what we're seeing is as I mentioned, the income changes, the scale increases. We're able to refi some of these projects and do much bigger deals. We're able to contribute more from our own pockets. And so we're both very aligned. We have a long history. We've known each other for well over, 25 or more years. And so we're kind of just moving in the same direction of just grow at the rate that makes sense for us. So,
yeah. Okay. So at first you're probably buying smaller deals, now you're getting into 40 unit. So are you selling off those smaller deals? Do you keep all of them and just refinance them to pull cash out or?
Yeah, it's been a refinance play. It's been a BRRRR model, if you will, but not the classic BRRRR model from the book. We were kind of doing this before it was a book or a thing, right? We'll buy something. Usually it needs a value add element to it, whether it's increase rents or do work on the property. We'll do those things and then we'll increase the rents and we'll see where that falls and we'll see where value goes. And fortunately, over the past, 15 years, the market has moved in our favor and we've been able to push rents in South Florida. And so we've been able to successfully get our cash out of most deals that we've done. Within a 5-year window, we are out of the deal most likely from a cash perspective, and then the deal is left behind operating. So we may BRRRR the thing over a 3-year period. It might be a 5-year period on some deals. And again, if you stack them for a long enough period of time, that means every year you're having some kind of liquidity event from a refi. And then you're able to go buy more stuff. And so we haven't touched any of the money from this stuff. We'll continue to take those refi dollars and put them in new deals, and we'll just continue to do that. And almost like it's not a thing, right? Like not like that we don't have that money. So
yeah, that's so cool. That's so cool. I mean, that's like the ideal, business model when you're starting from something low, you're building up, maybe buying 1 or 2 properties a year. I don't know how fast you guys went. Maybe a lot faster. I don't know. And
it depends.
Yeah.
There were years we bought nothing. 22 to 25. I think we bought a single family home, and then late 25, and then late 25 we bought a 40 unit. It just worked. So we didn't stop. We didn't give up in the years that the math didn't work. We continued to evaluate our options, and then we struck when it made sense. That's a thing that I think a lot of people miss on. Like they're looking for the fast money, the exciting thing. I will continue to do this boring thing forever. I'm psyched up by it, but there's moments where we're not doing deals, and it's like depressing to a degree. But if you just keep chopping wood, carrying water, and just move through those times, you're ready for the moment that the big deal hits. And that was for us. We didn't buy a deal for 2 years or more, and then all of a sudden, boom, the right deal popped up, and we were ready to go do that deal. And it was a creative finance deal. It was seller financed, which was nice and unique. We don't typically just go look for those, but it just happened to be a good opportunity, and we were able to structure some favorable terms on that, and so that worked out. And we're really excited about that one.
Yeah, nice. Yeah, the reason I asked about the capital raise, I mean, I'm all over the place. I've done single family condos, from condos up to a 5 unit, buying a 4 unit right now, and also been putting in a bunch of offers on 28 units, 16 units, so smaller multifamily compared to, what you're talking about. But those would be like raising capital, raise capital, do the deal for 5 years and sell it kind of thing. Or maybe hold it, maybe refi, hold it for 10 and sell it. And that's what a lot of the big guys are doing, and it's, that's just another way to do it, another way to get in. And
it's another way to get in.
Pros and cons.
There are pros and cons. I like to think of it in two ways, and maybe this will help listeners out there. Like, everybody talks about investing, but they really should be talking about making freaking money, right? Their problem isn't they need to learn how to invest. Their problem is they need to make money in their current thing they're doing. So is this your day job, or is this your investment, passive investment, right? Strategy. And so I think you got to separate those two to a degree. And so, like, if you're raising capital and you're contributing some money, okay, there's a little bit of an element of this is investment, but it's really more that this is your day job and this is making you money. It's cool if you can make a lot of money doing that, because then you can take that money and do it again and again, and you have the skill set to do it. It's very synergistic. It's very aligned with, hey, I want to invest in real estate, but I also have a business where we invest in real estate for clients, right? And that's really what it is, because really you're running a business.
You're the sponsor for the clients.
Yeah. So I think most people need to think about, like, how do I make $1 million a year? How do I build a business or do a job that makes me $1 million a year, where I can take that $1 million a year and then go invest it, right? Now, $1 million might sound aspirational or not, but either way, just like think about the number and just like start doing the math backwards. This is the engineer in me, right? It's okay, how do we, in 10 years or 5 years, how do we get to this? Okay, that means we got to do X, Y, and Z, and then there's some element of art there, like what's the compounding going to look like, et cetera. But if you start to do that, you realize quickly you need to make some money. And so I learned that maybe not too long ago, a few years ago, where I was like, because I was always like, oh, I have my day job and I'm going to invest my way to success, which is a thing. You could do that, but not at the level that I was expecting to reach financially. And so I still left my job, not really truly appreciating this. And then I found a way to make more cash. And then I realized, wow, it actually doesn't matter if I do good real estate deals, as long as I make a bunch of money and then plow it into these deals and not over leverage myself. Not to say that I'm not doing good real estate deals. I'm just saying if you make a lot of money, you don't need to be as sensitive to the deal you're buying, right? Because you just chalk it up as that was a cost of doing business. Okay, I paid an extra $100,000 on a $4 million deal. Well, I also just made $1 million this year. Okay, really, I just made 900, right? You kind of like, if you think about it like that, right? And so so the make the money part is the more, for me right now, is the more interesting part, which is like the brokerage business.
Yeah.
And the invest in real estate, fortunately, I've been doing it for 15 years. So it's like, that part is like, we know how to do this. We can figure it out. In fact, all we just need to do is spend a little bit of time and we find a deal. It's kind of like how it works. It's like almost like I'm so busy making money that I have to pull myself away to just go find that deal to deploy that cash. And again, fortunately, I started with the investment piece, but I don't know if you want to start with the investment piece. I think you start with build a business, make a bunch of money annually, and then figure out your tax problem, which is I'm making too much money now. I need to buy real estate and do this advanced or cost segregation study or whatever, or I need to learn how to invest my money, right? You can do it in parallel, but I think everybody skips the make money part,
right?
You know?
Yeah. Interesting. Yeah, that model makes sense. I think it just depends on how people find real estate and stumble into this world, because we're not really taught this at all in school. And so where did you hear about this? Like for me, I mean, it was kind of from my dad, and then I kind of read a book, and then I did some random health coaching thing, and that led me to meet some people who told me, hey, there's this cool real estate club you should join, and I joined that. You know what I mean? This random weird world, and then I started doing deals, and then I stumbled into coaching, and now that's what's making me money to put into real estate. So it is kind of in a roundabout way. So if you're listening, it's like, hey, we're giving you a head start. You can skip all that craziness and just kind of go straight to it. Go straight to it. Make the money, take the money, put it into real estate. And you can do it synergetically with real estate, like Larry's doing. He's doing a brokerage, so he's learning every day more and more about the real estate world, and he's staying in tune with the market while he's also, over here finding deals to invest in. So there's options like that, and I'm sure you have a lot to say about those synergies and how that's benefited you too.
There's benefits and negatives, right? Nothing's perfect, in my opinion. It's like, oh, I want to be a residential real estate broker and invest in multifamily. Those are two different things.
Mm-hmm.
Like, you can't go pick up the phone and call any resi broker and they'll know exactly how to invest in real estate, let alone invest in multifamily, or have access to that deal flow, or have built those relationships, because commercial multifamily is a relationship game without question, right? I mean, you can't just make an offer and buy something. You have to convince the brokers that you're worthy, because they don't want to waste their time, and there's more buyers than there are sellers in this market, right? So still to this day, at least down here. So there's benefits, but the synergies aren't perfect. Your business, on the other hand, sounds more aligned, right? Hey, I source deals, I raise capital, and we buy these deals with outside money, and I make money. That sounds interesting. And when I do that, I also stumble upon other better opportunities that maybe I would just do myself if I can just do it, or I continue to raise capital and continue to do it, or I'm building all these relationships in this market as a real guy who really does this. I have to go do that outside of my day job, right? I have to go do that outside of my resi brokerage business. And so again, that synergistic moment isn't perfect for me. But this isn't me complaining. This is me just saying any path you choose is not easy, because some people might look from like I could say, you and I both could say this. In Florida, I could have got my professional engineering license. I could have gone and started a construction business where I stamp, engineering drawings, and I wouldn't have to be this residential broker selling real estate, getting my ass kicked every day by, people who are wasting my time, et cetera, right? Whatever it is, or running a team of agents. I would be running a team of engineers, and and people would respect me and all this other stuff, and right. But instead I chose this real estate thing. And so I could say that would have been a better path, but I'm sure that business has its own problems and its own maybe cap on revenue, or whatever you want to call it, or risk profile, because you're stamping engineering drawings. That's like the riskiest thing ever. So, because you're putting your license on the line for those things. So anyway, long story short, I guess my comment here is, any business model has its hurdles. If it was the perfect business model, you probably can't get it. You can't do it because somebody's already done it and captured it, or it's super competitive, et cetera. So,
and it's just funny what you're saying, because I am literally also started a company with two guys here in Dallas to do development, basically. So stamping drawings, that's what I'm going to do. That's my role. That's part of my role. It's going to be a lot more than that, but that is part of the role. And so, anyways, again, the listeners, you can see, like, both of us are examples of where we have a lot of different things going on. There are synergies between them, though. I mean, Grant Cardone says this. So in TEDx Coach, I follow Grant, and he always talks about doing the math. Do the math. Just do the math before you make any moves. Do the math and reverse engineer it. But he also says about multiple flows of income, like everybody wants to have multiple flows of income. He always says to, maximize your first flow first. Don't just dump the first flow and go to the second, and then dump the second and go to the third, and you got to maximize first. And then when you add a second, try to find synergies between them so that it's not like two separate day jobs. It's like they feed into each other. In an ideal world, these are some things to think about. So I guess, the question, Larry, to you is, in your opinion, how are you managing, and how can people manage so many different things, so many different responsibilities, jobs, whatever you want to call it? And, how can people, whether they're an engineer, they're in the STEM profession, they still have their W-2, or maybe they have their own business. How can they think about when's the right time to get into real estate? How do I add to the plate?
Yeah, I think for me, it's like simplify as much as possible. It reduces your risk, right? Yeah, I think this is another thing that, and maybe I'm making this up, but if somebody said this, Warren Buffett maybe, it's like you don't need to diversify, right? You actually don't. If you know exactly what you're doing in one thing and you know it so well, your risk profile is like substantially lower. So like, for me, it's like these like multiple streams of business, all that nonsense. It's like, I'm just going to, don't get me wrong. We have multiple streams of business, but it's like you said, it's like stemmed from the one thing that we do, which is broker real estate. I am a real estate broker. This is what I do. I don't run a handyman business, which some realtors go off and do. I don't own a title company. I have relationships and partnerships with title companies. I have my mortgage license and I have partnerships with mortgage brokers. And we've kind of created multiple streams of income and or supporting or mutually beneficial marketing strategies, et cetera. So we've created strategic partnerships, but we're not running around here trying to do 100 things. I'm selling real estate and we're trying to do for people. I'm a real estate broker and I'm trying to deliver the best service and grow that business. Every time I look at something else, somebody throws something else my way, I'm like, well, if I just sold 2 more homes this year, I'd make the same income off of this thing that you're trying to share with me, and you want me to spend how many hours? And again, it's never that many hours, right? There's always issues. It's always. Like, okay, well, I'm just going to continue to sell more real estate, because at the end of the day, for me, we built a business to make money and to create the life we've chosen to or desire to live, and create a level of freedom, et cetera. So the business is generate revenue and or profit, and so focusing on one thing is the move. And then the second thing is like, what do you do with that money when you get it? So you invest it. How do you invest it, or how do you protect it from taxes? How do you protect it from, depreciation from, or just, other issues that come up? And that's the second thing. And so there's 2 things. That's it. That's what we're doing here. And there might be, little differences on a daily basis, but that's the thing. So I think if you simplify, you end up in a better place. And so what I think the big issue that most people run into, at least I see this with, some of my friends, and eventually they get out of it, and or I try to beat it out of them because I love them, is like, you do one thing until it gets tough or boring, and then you move on to the next thing, and you start your journey all over again. Right? And then you do that again until it gets tough and boring, and then you jump onto the next thing. Until you stop doing that, you're going to continue the same journey unless you get lucky. And I'm not here to win because I'm lucky. I'm here to win because I guaranteed the win, right? And so I'm famous for saying this internally. It's like, you can engineer the outcome you want. You just got to lock in and commit to it, right? And so that's the move. Like, just the real estate brokerage business gets boring, or I get depressed, or I feel like it's not going to work, or I question the decisions we're making to scale this thing. And I just keep doing it. That's it. I just keep doing it. I keep iterating. It's not that I just keep doing the same thing over and over again. We keep studying it. We keep making adjustments, and we keep changing our thinking, because the thinking that got you into the problem that you're in, or the stalemate, or whatever the situation is you're in, is not the same thinking that's going to unlock the next level. You have to really push. You really have to break that down. You have to go find new ways to think about this thing. And if you do that, you unlock it. And when you're in that moment of like, wow, I don't know what to do here. I've thought of everything. I've tried everything. Oh man, that's the sweet spot. That's the best place you can be if you push through. And I've done this enough times now where I'm like, wow, I look back and I'm just like, this is incredible. It's incredible. That moment is an incredible moment, because so many other people failed there. So many, right? Yeah.
You just can't, this is inspiring. So I appreciate all these nuggets you're dropping, dude. But yeah, a lot of people just say, like, just never quit. Like, if you never quit, you'll never fail. And it's easy to say that. It's a lot harder to do that. But, that health coaching thing I mentioned, it's like I did it for maybe 6 months and then I quit, and it's like, man, now looking at the real estate thing, it's been years, and some points I do feel like, man, when is the next thing coming? But I just remember, just don't quit. Just keep going. You said it yourself, you went couple years without a deal, and then boom, you get a 40 unit, out of there. So not out of the blue. It wasn't magic. You did the work. And so, anybody listening too, who's maybe you are transitioning to self-employed, or you got a side gig or something like that, but especially if you're transitioning, because this is me right now, transitioning to, self-employment, and what Larry said about, basically engineer the path and then just commit to it. That is absolutely true. You can engineer the path, but then you got to do it. You got to actually commit to it and do it, and then you'll start seeing the results, and you can tweak as you go. If the results aren't what you want, then you tweak the plan. You increase your action, until you dial that in. So
yeah. I used to think that, I used to say this to myself because I've been through different, I don't call it different careers per se. I was a plant operator in power plants, which is how I ended up being a consultant at GE. And so I spent about 4 years as a plant operator. And I felt like I had this level of mastery there. So I felt like 4 or 5 years, or I felt like I could get a little bit more out of it if I stayed one more year. I felt like that 5-year window was the window, right? It's like you lock in for 5 on something, and I mean really lock in, like really commit, not like just, messing around, but like really trying to master the thing, go in with passion and try to just try to learn everything. And then I did the same at General Electric, and I felt again like that was the moment where like beyond 5, you start to really reap the benefits or the compounding of that education. Yeah. And now I'm, what is it? It's about 6 years, a little under 6 in full-time real estate brokerage business. It's more like 5 if you really look at it, but I can feel the compounding starting to happen, and you don't realize it until you look back on it, really, right? Until you're in that moment where you've crossed the threshold of, wow, the compounding starting to happen right now, or I'm feeling the effect of the compounding. It's almost like this, it's like a stepwise function for the engineers out there, right? Like you don't feel the growth. Yeah. Well, and so it's like a level flat plateau, and then all of a sudden one day, boom, and it's like, oh, he's so lucky. How'd he grow that, right? And then back to level off again, right? And so now you're on your next 5-year journey. So I guess I'm saying this to say, like, I don't know if, I think people think too short term. You need to be locked in for 5 to 10 years to really it's 10 years to really benefit and reap the reward of your execution. And that's the best thing. Like, this is like this Einstein thing. It's like the compounding is the greatest force in the universe, right? That's a fact in real estate investment, but it's also a fact in the knowledge piece to anything you do. And so that's where I think, again, a lot of people miss because they hit that level of boredom. You break through that though, and now you're benefiting from the compounding.
Yeah. For me, well, one of the boredoms was I was in the wrong room. I learned a lot from certain people, and then I was kind of at the top of that group then. And I'm like, okay, now I'm like kind of peers with the people who taught me brought me to here. So I had to go to the next room. Yes. Yes. And for me, it was the 10X group. But I went to a real estate summit there, and I'm just like, dude, like everywhere I look, this person's got 500 doors, this person's got 1,000, this person's got 3,000, this person's got 5,000 doors, and they're just, oh man, it's just like, wow, I'm literally at the bottom of the food chain in this room right now. And so that's power. It's scary, but it's powerful. And those are the rooms you want to be in.
You need a good mix, I think. You need that world where I'm leadership in my business, right? And so I get a little bit of that ego boost, and then I go hang out with the other people who are way more big time, and you're like, oh, one, I can learn stuff from you. 2, it's like, I need to keep pushing. What am I doing? I thought I was, just because I'm so much smarter than the team I lead or more knowledgeable, more experience, or whatever the word you want to use is. It's like you turn around, you look at your peer group, and you're like, wow, okay. Yeah. So your peer group is where you really benefit. And so if you can surround yourself with the right peer group where they're just pushing, and it's almost like a little bit of a competition for me for the people I surround myself with. And my peer group itself is definitely trending towards outperforming me, and I just can't tolerate that. It's intolerable. So,
yes. Yeah, we got to figure out what each of us are different, what drives us, and just lead
source
into
of motivation,
that.
Right?
Yeah.
That's not always a motivating factor. Sometimes it's depressing, right? So that's why I say you need a good balance of what's going to drive you at each point in each moment in your day, each point in your life, each chapter, and so you just got to go engineer it. You got to go engineer the peer group. Do I need to go spend time with these guys, or do I need to go spend time with somebody that's going to make me feel a little bit better about myself? You know what I mean? So,
for sure. Yeah. Cool. Awesome, Larry. Well, hey, I appreciate your time today. Before we wrap up, where can people connect with you? Where can they find you?
You can Google my name, super easy. You can find me there. You can reach out to Larry at discoversouthflorida.com. I'm pretty easy to find online, so Discover South Florida on Instagram. I also have my own personal Instagram profile. Feel free to DM me, etc. I'll respond to anything. So, yeah.
All right. Love it, man. Appreciate your time, and we'll talk to you again soon. Thank you.
Man. Yeah.
Thanks for tuning in to this episode of the Cash Flow Authority podcast. We hope the insights shared today help you take the next step toward optimizing your finances and building sustainable wealth. If you enjoyed this conversation, please take a moment to subscribe on your favorite podcast platform and leave us a review. It helps other entrepreneurs and investors discover the show. And don't forget to catch the next episode for more insights. Until then, keep mastering your cash flow.